Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 25th of September 2019, and we're going to look at and expand on an answer we gave to one of our subscribers, 00RPHB, who asked the following question. Quote, "A good rule of thumb when it comes to gold and silver is that when the ratio is under 40, you should sell silver and buy gold. And when the ratio is above 80, you should sell gold and buy silver. For the rest of the time, just hold. This strategy has worked well for the last 50 years. Now, this point was made in response to the video we put out yesterday, and we put a link in the description box below, where we asked the question, should you buy gold and sell silver and have their prices already peaked? Now, the brief answer we gave was, quote, "Broadly we agree. However, have you noticed the continued lengthening of time that the gold to silver ratio is remaining at an ever higher level?" Now, please appreciate that we are often receiving over 100 comments to each of our videos, and therefore we are limited in time to the length of answer that we can give. We would love to give longer answers, but sometimes time just does not allow us to. Anyway, 00RPHB, we'll call him 00 from here, otherwise I'll get tongue-tied. 00 replied, "I don't know if 2011 was that long ago, and the ratio tends to go down in recessions of which we are due for. Not only are all the recession indicators flashing red, like an inverted Fed yield curve, but it is already the longest expansion on record, and one with the dumbest story ever. Where before booms were fueled by an existing new technology like trains, automobiles, transistors, or more recently the internet, this new bubble comes from a, quote, by the effing, we won't use the word, dip, unquote. It comes from the unshakable belief that central banks will always bail the markets out. That can only end badly, and it is when that happens that $50,000 gold is no longer just an implausible pumper's tale. I remember you talked about the possibility of a return to a gold standard before, and your dismissal of it annoyed me greatly, as only M0 have to be backed, and when the fiat system collapses, it is quite literally the only way out. The only question is when," unquote. Now, this is a great question and rebuttal, which frankly we welcome, because it shows that 00 is thinking more deeply about the subject. Now, before we reveal our answer to him, we have to say that when we produced our video, which was back in March, 11th of March of this year, entitled, "Will Gold Ever Be Used to Support a World or Global Reserve Currency?" we pointed out that there is approximately $7.6 trillion worth of notes and coins in existence, and $8 trillion worth of gold. So there's a degree of parity there. Now 00 argues that this is all one needs to cover, and we have converted to a gold-backed currency. Or at least that's what we understand by his argument. Now, we not only disagree, we completely disagree. Most money is now moved between parties and used via those held in bank accounts digitally, of which there is $90 trillion worth, including currency. How do you have a gold-backed currency which does not include these, especially as these deposits are the ones that grow via interest as well? Now, this, with respect, is a misunderstanding of how our economic money transfer system works. For example, if I hand you $100, which is now backed by gold, you paid into your account that isn't backed by gold, or the current deposits are not backed by gold, then the only money you'll be able to draw out is that $100, because the rest of your bank deposit is not gold back. And if we do not cover those money in the bank account, and therefore you are allowed to withdraw it, we haven't got a go-back currency because, after all, the banks will physically print, say, a limited amount of dollars, but then continue to create digital credit in your bank account, which will grow at a faster pace than the physical currency will be enabled to grow. And especially, what happens as people are using less and less cash all the time, and eventually will use zero cash? So what's the point just backing cash currency with gold? Now, to cover the bank and deposit accounts, which value $90 trillion, gold will therefore have to increase 11-fold. Now, that is feasible. It's not beyond the realms of possibility. But is it likely? Now, hold on a moment though. What about outstanding debt to be repaid, which is estimated at $215 trillion? This has to be covered, otherwise, where does the money come from to repay that as well? Because those debts will be repaid in some format, usually by some form of cash going into the bank or bank transfer. Because if you limit the monetary growth to gold growth, then those debts cannot be paid off, which would mean that gold value would therefore have to rise 38 times to cover that plus MO and M1. You really think that's feasible? Now, one could glibly say, well, have a debt jubilee, write it all off. Possible, but the economic carnage and bankruptcies that could create would be immense. Now, we haven't even bothered to mention the value of derivatives, which range anything from $554 trillion to over $1,000 trillion, and some argue even $1,500 trillion. I think the name is a zillion. You do the maths. Because if these aren't covered, how are these repaid? Except by digital ledger, which then is money again created out of thin air, devoiding the purpose of a go-back currency. So our conclusion is that covering MO, or M0, is not sufficient. Now, having made that point, this is the answer we gave 00, RPHB. Quote, if we were to tell you 00 that central banks around the world are already working on a blockchain-based type system for a replacement to all major fiat currencies, as both an emergency measure in case there is an economic collapse, and as a measure to eventually be introduced when the continuing confidence begins to wane significantly, and that this currency does not rely on a gold standard, but may reference or include it, but at a low percentage amongst a number of asset-backed commodities, and that it is at an intermediate stage of progress, perhaps you may appreciate that whilst we can see gold rising in value, we do not foresee its immediate or near immediate rise to $50,000. Now, perhaps it will be worth $1 million or $100 million when the dollar is discarded and replaced with its new digital currency. But then the dollar will only have paper value, as will most other currencies. Because if the dollar fails because of its interconnectivity, so will most other currencies fail. Now, with regards to recessions, yes, typically, we have had them every 7 to 10 years, but that was based on the old economic system. We now have international banker cooperation, intergovernmental cooperation, an economic philosophy of perhaps more Keynes than Milton Friedman. We are skirting around the edges of MMT, which is modern monetary theory, all designed to increase liquidity into the system and to stave off, reduce or completely avoid the normal recession experienced. After all, we should be in the middle of a major recession by now, with zero growth rates, if not negative growth rates, if history is anything to go by. But we are now in a new paradigm. Having said that, we do believe that eventually the system will fail. Yes, we do. But we are nowhere near the cusp of that failure. We can foresee a stalling of growth and even a lowering of growth. But we can perhaps, up to 10 years, witness stagnant growth, especially for the US. It was only a few years ago that the talking heads and everyone on YouTube stated Greece would collapse imminently and end up like Argentina. A couple of years ago, it was Italy. Yes, they all have major economic problems, but they're all being bailed out by the central banks. And this will continue until it can't. But it can, for many years yet to come. So we agree it will end badly. Or perhaps end with a completely new system replacing it. And what are the people going to do? Reject the new system? They can't, because there won't be any alternative. And don't think for one moment the people of the West will turn around and say, we're rejecting the system and using gold. Because most of them don't have any. Nor do they have any silver. And those that do, it's still small potatoes. And they won't be able to buy it, because it will either be too expensive or not available to them. And what currency will they use to buy it? The digital currency they rejected? So what will be the result? The acceptance of a new digital system, or anarchy and riots and mass murder and destruction. Then your gold will be no good. Only arms and ammunition will be. This path has already been assessed and designed and allowed for. And like it or not, we're all being corralled into a pen which we will have no choice but to enter, as the alternative is death and destruction. Unquote. Now that's the end of our answer to 00. Now that is quite a stark reply, but one which we sincerely hold. The US by now should be in the midst of a recession, which should have started 2 or 3 years ago, if history is anything to go by. And yet, the US still has record employment levels and 2% annual growth. Now we accept public figures are massaged, but most of the way they've been calculated haven't changed for years. And so identifying whether you were in a recession 10 years ago versus today is a similar process. Now, is there a risk of recession? You bet there is. Even Germany is quoting zero growth. But let's not deceive one another about this. The Trump tariffs, whether you agree with the long-term goal or aims or not, are having an adverse effect on current growth, both in terms of the effect of higher prices and also the unwillingness of businesses to borrow and invest in this current economic uncertain environment. Many business organizations have quoted this, as well as many banks. Now also bear in mind that whether in the US you're a Democrat or Republican, the belief in a sound monetary or money system, where you only spend what you earn, went out of the window years ago, if it ever existed in the first place. And money printing and borrowing is the new norm. With inflation at or around 1.6% in the US, with a Fed target of 2% being regarded as what is acceptable, one does not need to be an economic genius to work out that more money will be printed. Perhaps not literally printed, but created, and spent to stave off the effects of recession, as the inflation figures can cope with it, allegedly. This is what China is now doing, with its economy potentially forecast to grow less than their target of 6%. It will embark on further infrastructure spending to keep workers employed, wages being paid, consumption continuing, and so the effects of a recession are minimized until, hopefully, global trade picks back up. This is what Western economies have also either started or are about to embark upon. Now please bear in mind, countries like the US can virtually print as much money as it wishes. The issue it has is inflation, currently not a problem, and also the repayment of interest, which is now going down because rates are being lowered. All the US has to do, in effect, is not to print percentage-wise more than other countries are doing. Then its comparative dollar value status is maintained. Now, how long can they continue to do this? Well, no one really knows. But with international cooperation, we estimate up to another 10 years. But we can see, of course we can, major cracks developing between 2 to 4 years' time, by which time interest rates in the US are likely to be zero, and we do not know how other global economies will have fared by then. Meanwhile, the central banks will be working together, as we gave in our answer to 00, on a new digital, perhaps blockchain-type supported currency, to be introduced when the system no longer works. Will that be 2019? No. 2020? No. 2021? We don't think so, as there are many mechanisms in place to prevent the global collapse occurring that we witnessed in 2008. Now, are we saying don't be concerned? No, we're not. We should all be concerned and prepare appropriately. But equally, we're not on the verge of opening up our nuclear bunker and hiding in it either. That said, and the only caveat we have to all of this is whether some tin-pot tyrant manages to create a world war through aggressive military action, where diplomacy, sanctions and supervision could be used instead. Now, by the way, for the sake of clarity, we're not talking solely about President Trump here, as there are many world leaders around today whom, perhaps for political or religious ideological reasons, may believe that the risk of mutual destruction is a price worth paying. And if that happens, then any financial system will go into meltdown. Now, we accept you may agree or disagree with our assessment. But please note, we've been listening to this imminent economic collapse and necessity to move to a gold standard to save the collapse from occurring for over 10 years. And also please bear in mind that even when we had a gold standard, recession still occurred. And whilst we fully accept things are far from perfect, or even far from desirable, they are also nowhere near as bad as many paint it out to be. There are risks, there are dangers, and as we have often stated, whether it be dollars, sterling, euros, gold, or whatever, they are only worth something while someone believes they are worth something. Just remember, shells, feathers, salt, bottle caps, tea bricks, cheese, and even candy have all been used as forms of money. And what is their worth today? Once that confidence is eroded, the slippery path to the end of civilization, as we know it, harkens. So whilst we all know the house is built on sand, it's in everyone's interest not to disturb the foundation, because if you do, unlike on the beach, a bucket and spade will not be sufficient to rebuild it. What do you think? Do share your thoughts. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.